This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. Next up on your MicroCap Investing Conference calendar, the Planet MicroCap Showcase Vancouver in association with Small Cap Discoveries happening September 25, 26, 2024 at the Fairmont Waterfront, Vancouver. We have announced presenting companies, speakers, sponsors, the keynotes, when they're all going to be happening, everything like that. And a part of that crew is Paul Andriola, Brent Todd, Jesse Gamble, Matthew Martine, Ryan Irvin, Harold Leishman. I mean, it's an epic lineup of speakers. One of the best lineups of presenting companies I've ever seen and put together. So don't wait. If you can make it, go register on our website at planetmicrocapshowcase.com and hopefully see you in Vancouver. Now, my guest on the show today is a frequent guest and collaborator and friend is Maj Soueidan, founder and editor of Geoinvesting, as well as MS MicroCaps on Substack. We close out what feels like the shortest summer ever. And we want to wrap up on a few topics, including the microcap performance for July and August, TSSI performance, Aerospace, fintwit, growth capital for quality companies, and more. We discussed a number of stocks during our interview today, and Maj may or may not own some of the companies that comprise their Tier 1 quality microcap index, so please see MS MicroCaps and Geoinvesting for full disclosure. Thank you again for tuning into the Planet MicroCap Podcast, and please enjoy my conversation with Maj Soueidan. Maj, thanks for joining me today. How you doing, man?
Yeah, how you doing, Robert? It's been a little bit.
Yeah,
Not
it's
that
been
long, but
no. Well, look, sometimes I like to give it some room to breathe so that we have even more to talk about. And quite frankly, we got a lot to talk about, I think, right?
August is a wild month for sure. So
Who would have thought? I mean, it's like that one the Paul Rudd meme, like, not me. Just did not expect August to be as active as it was. But yeah, I wanted to invite you on to do kind of like a, sometimes we do like a half year review type thing, but because the summer kind of started off pretty slow and definitely picked up steam, I figured we'd do like an end of summer wrap and then kind of looking ahead, things to consider, what's going on, that kind of stuff. So figured we'd start there. You got your, for those watching on YouTube, Maj has his wonderful MS MicroCaps disclaimer displayed up there because we will be talking about a few names and we will always do our best to disclose on those names if we are owners or not. So with that, Maj, end of summer, August was nuts. Take it away, my friend.
and of course, we're not investment advisors, and everything we talk about is our opinion here and education purposes. And you agree to our terms and conditions at MS MicroCaps and at Geoinvesting too, which has the same similar terms and conditions if that comes up. Yeah, so let's talk about real quick. I'll go through some slides here, Bobby. We can tee up a little bit, maybe some other stuff we want to talk about. But I think really, as we were talking before, the index has been doing pretty good. This for those who might be new, this is a MS MicroCap Quality Index. Includes quality stocks that it's an index of 97 stocks now that has quality stocks that meet certain parameters, as well as high probability turnaround stocks that are kind of meeting multi-bagger markers, and we put them in the index. So you just basically try to give more alpha to the MicroCap advantage that already exists, that Shaughnessy talks about and a lot of people talk about. So, and as you know, and I think a lot of us are talking about, Ian is, and Paul, we're all talking about profitability and quality matters now. So I think it's a theme that's ringing well. It's proven true for performance. And again, these stocks are, and the index here, Micro and NanoCap, you're not going to see a lot of them in the Russell 2000 or even, in the iShares MicroCap Index, really. So so the blue line is, is the MSMQI, which you can see since February launch of 22 is handily beating the market, the SPY, NASDAQ, and the iShares. Right now it's up on average over that time frames of 64%. Year to date, we're up 33.29% versus 7.96 for the IWC. Remember, by this is the passive index. I want to know behavioral bias. We live what we put in this. We live or die with stocks put in there. So if they go up, they go down, whatever. We just want to ride it. So there's no active kind of management or resetting, at least so far, of the index. It just keeps accumulating over time. And I will tell you, August was a little scary, and we were. During August, we had this really, well, before August, and July was a great month for us, right? Actually, if I look at July, in July, we were up, 13.87% in July. And the index ended July up 59% on average. Then that Japanese carry trade thing, whatever, and boom, we were down we lost all of it, almost all of it real quick. And I think I had told you that one day it's going to happen, right? This index is not going to keep going up. It's going to follow the general trend of the market. Markets go up over the long run. So our goal is to beat the market over the long run. So, and I was curious to see what would happen. You get a little cocky once in a while, hey, we're going to hold up. We got good stocks, doesn't matter. They all fell. So the index fell pretty hard. Like, God damn, I was hoping to say, okay, we could beat the market, even on the downside, but it doesn't happen that way. So quickly, it was a quick reminder. I liked it because it was a quick, hey, get your ego in check. You just, if the market falls, you're going down with it, most likely, if you have an index like this of 97 stocks.
For any of y'all that are new to microcaps, this is a 30, 40-year vet that is still saying that. So you better friggin' that if he's still saying that, for any of you that might have picked one that you thought was a high riser in the last, couple months here was, fintwit darling, just make sure that you understand that, you might just have good timing, maybe. There you go. I mean, I think anybody that was, signed up, expecting short-term returns is, you always got to qualify that. Like, look, this isn't meant for a, 1 to 2 year type, type.
Well, the good thing about it too is what I've learned from building this quality index has been great for me because, even though I've been doing it for a long time, building an index in that kind of fashion has just given me more confidence in the research and the stocks are in the index. So even though the market went down, the index came down, I wasn't phased. I was looking for opportunity in that drop because I knew I had quality companies in there that meet these kind of requirements we're looking for that are proven over time. And these requirements I'm putting here are the requirements I finally put pen to paper over the last 30 years. This journal of education I've come through, not just my own investing, but other people too, and observing. And so there's 10 quality markers. And I think we have 9 multi-bagger markers now, and that's going to always keep increasing for us. There's obviously a lot more than 9 out there, but we've kind of pinpointed the best 9, we think. This is the same kind of slide here, but with a little different kind of representation of what's going on here. So you see here we have the performance spread. So you have the left column here is basically the current returns, and the right side here is at the highs. So you'll see here we have 20 stocks currently over 100%. Or at 100% or more, and at the high we had 32. You'll see in the next slide coming up later. We had another one hit in August already, actually 33 and 34 on the way. So basically, 33% of stocks in the index have at least gone up 100%. Our biggest one right now is TSSI, almost hitting 1,000, which I do own, yes, and that might be our first 1,000%er. So I'm glad we got that within 2 years, but that actually happened so fast. We put it in the index in March, or was it May? And I think.
Can I just stop you right there? Because I think you put out in your newsletter about how there was a short report on, I think it was SMCI that showed some potential tailwinds for for TSSI. Can you explain that? Like why you think that?
It's pretty freaking amazing, actually. I mean, if you really dig into it, I don't think a lot of even TSSI shareholders have understood the gravity of what's going on here with SMCI. Now, I have no opinion in SMCI. I don't own the SMCI, but on my site visit, when I went to CTSS in Round Rock, Texas, which, by the way, is where Dell's located. Twitter's there, right? And when I was doing the on-site visit, we were talking about what's the issue, what's the biggest pain point right now in the data center integration market, right? And there were a few things. There was power, having enough power to basically run these data centers, which is just increasing exponentially the needs there. We talked about storage, right? It's causing storage needs, and it's also quality of integration. So basically, TSSI takes like an OEM server, say like a Dell, brings it to the facility, cables it, puts everything in it, whatever, and it's the ability to build a rack and then deliver it to where it's like maybe a Salesforce, who knows, where one of Dell's customers, for example, or the OEM's customer. So there's some more intricacies with AI servers in doing this, I guess, right? So when we were talking about these things, and I was actually asking as an investor if I want to invest in other areas besides TSS, where would I want to invest? And we're talking power and storage, these things. But he also said, look, there is a problem right now in the industry of quality. And he said, even when he came to the company, I've owned this stock for some time, actually, under previous management, and there were some quality issues probably that had to be fixed. And they did that, and I'm glad they did. But there's a lot of competition out there that's unable to really deliver on time, deliver quality product. And we didn't talk about it necessarily, but I'm pretty sure that SMCI I felt it was in that little bucket of low quality, because he was even saying some of the leading integrators were having issues, with that quality. So I kind of had that little buzz. That's interesting. I didn't short SMCI. I probably should have if I would have done more digging. And like Hindenburg, by the way, put out that short report, by the way, on SMCI. I think it was 2 or 3 days ago. And when the report comes out, and I was reading the bullet points of these crazy bullet points. And there was all these allegations of fraud and accounting mismanagement and accounting fraud. Some really interesting
classic short report.
It was a great review. It was a great report. But then I got to a bullet point that talked about quality issue that SMCI is having, and the bullet point was something like SMCI having quality issues, which is causing them to lose customers, and also just lose customers to competition. All right, and I thought, wow, that's interesting. Kind of like substantiates, and I think Mark Gomes has been talking a lot about this too. Mark Gomes did some excellent research on this, on the ground due diligence through his network to try and figure out, okay, well, SMCI probably was a company that was really suffering, and that Dell was probably taking a lot of that business. So basically, SMCI, by the way, sells servers, and hardware, which I think the bulk of its business, but they also do integration in house too. That's part of that, and so I think they've had quality issues allegedly in this report across the whole chain of that thing there. So, okay, so I'm like, all right, that's very, and by the way, the TSS I had not known that Hindenburg put the report out yet, and I saw TSS spike from like 485 to like 535, 540, 550 all of a sudden, and what's going on here? And then when you start reading the SMCI report, I think maybe some savvy investors try to figure out that, hey, there's some interesting potential implications here for TSS. Now, the report also goes on to talk about later on page 4, which Mark Gomes pointed out to me. They really go in depth into that quality issue and talk about the customers that are kind of dropping out, where they're going. And you start to see, wow. And not only that, it's very complimentary of Dell. The report actually speaks highly of Dell, and where Dell is benefiting from getting all this business, the server business, right? Well, who does a lot of integration for Dell? Even though TSS isn't out there saying it, Yeah, we know, we think it, well, we know it's Dell. So wow, that's so when you see all these, we think about this, where are all those SMCI customers going to go? And if they're going to Dell, you can start hypothesizing that there's a great opportunity. There's a great chance that maybe TSS is going to be a big beneficiary of that. They're already doing great as it was, but now that's just an added benefit. It's like almost like a perfect storm going on for TSS. Then now they got quality under control. They're Dell's. I don't know if they're their main. Maybe they're their main partner. I don't know, but definitely a significant partner. You have SFCI falling apart. If you read the 10K the 10Q closely, you'll find out that Dell is becoming very supportive of TSS because TSS has a lot of customer concentration with Dell. So if you look at it without knowing the story, you think, oh my God, all this revenue with Dell. But when you understand that it's Dell's customers that have relationships with TSS, it's not as concentrated. And then when you start understanding some of the verbiage in the 10Q about Dell kind of supporting TSS, committed to doing it for the next few years, you start realizing that, okay, they're committed. This isn't as bad as it is. You want Dell to be the main customer here. That's what you want. So you have that. Now you start going, okay, well, who else is around? Who else is in Texas? Well, Twitter's in Texas. Interesting. Twitter's built, Elon Musk is out there building, building data centers for his projects. So that makes sense because there's all the speculation. There's been some tweets and some stuff on LinkedIn. Kind of, you have, Elon Musk tweeting out stuff about the data center. You have the Dell, CEO of Dell doing it. On one of the posts, you had actually the CEO of TSS saying, go. I want to reply to one of Dell's kind of, I think it was a LinkedIn posts. So I think the market is slowly starting to figure out that this Twitter might be or is probably a customer of TSI through the Dell relationship. Now, what's interesting there is that SMC, if you look at a recent project, data center project, Elon gave half the work to SMCI and half the work to Dell. Now that we see that there's some quality issues, you guys are wondering, is more that stuff that was given to SMCI going to come over to Dell now and go to TSI? You see a lot of great things happening here, and the last quarter was incredible. But we didn't gotta get into that. But it's looking really, really interesting. And the SMCI basically report that just came out serendipitously confirms that our suspicion that maybe SMCI had a lower quality product and that TSS might be the beneficiary of that because Dell is going to be the direct beneficiary.
Are they big enough to handle the kind of demand that you're potentially suggesting might come in as a result?
Yeah, I think the CEOs addressed that, and I think they're going to have to definitely build out a new facility to keep the demand. I would think 6-7 months, maybe 8 months. I mean, their current
do they cash the builder, or they're going to have to raise capital? Right.
I don't think
they could probably do with debt. No,
I think they can do some debt. I think at the right price, people will throw money at these guys. Yes, I don't think there'll be an issue. Maybe maybe they get $8, $9, $10. We'll see. If my projections are they'll do about even before all this stuff happened here, and not even considering a lot of their other pieces of business that they have. I'm only talking about rack integration, which, by the way, the current facility can now do 10 times the revenue it used to be, or units it used to be able to do. And the second quarter gave us a first look at those margins, what they're going to look like. So they did, I think, 6 cents on only 1 quarter's worth of that rack integration on that the 10x kind of forecast. So just looking at that, and looking at the Q2 and understanding the margins, I'm looking at close to $1 share per EPS run rate really soon, maybe as soon as 20-25 cents in this Q3. And that's just off this facility, and that's not even talking about. So basically, I kind of project. I think I was projecting that at the end of that 10x ramp, whenever it happened, at that time maybe $1 run rate. But now I'm thinking they might be at that dollar a lot earlier. So this third quarter is going to be very interesting to see what kind of margins they have. And you can look on LinkedIn, their employees are increasing. So I'm not even including their high margin business growing, which is their maintenance revenue. I'm not even including any growth in their what's called procurement revenue, where they procure equipment for Dell for the customers that Dell doesn't do stuff for.
Now I'm looking at their chart for the last month. Like the TSSI is why the MSM UI is up 64% in the last month.
It's a big part of it. But I will say 70% of stocks in the MSM are up. So, and back to the chart here, 50% of them,
I see.
You see it there?
Okay, I see it. I'm just,
I'm ready for you.
Yeah. That was funny, man.
I should tell you, we haven't talked about it yet, but I have a zombie index, by the way.
You have another thing?
Yeah, we haven't launched yet, but I've been tracking that for 2 years. And it's tracking all the low quality stocks in the MicroCap, MicroCap world, and that's just kicking ass too. So we're like long quality, short low quality. It's fucking great.
Wow, you definitely need to talk. We'll save that one because I want to see some data and see some of the charts and the criteria that you're using for the low quality stuff, because I mean that's a pretty big indicator for, we talked about it, I think, back in June, or no, it was in July when we were like, we're back. Yeah. So I think that's more of an indicator of we're back than like the high quality stuff,
Yeah.
Going through the roof.
You're getting alpha on both sides of that point. You're getting basically maybe another 18-20% alpha just in that piece of it. So you're getting this crazy in returns and the index kind of going along in the passive. You're also getting more. So I can imagine when we do go down big, we have that. If you want to apply strategy, the hedge is going to work great.
So why is the IPO market still so slow? It's not like there's definitely hasn't been a few new names at all. I mean, not that that's a big indicator by any means, but it has been still slow.
It has been. I mean, I think that you have. I think first of all, the last 15 years or so, or maybe more now, the quality of companies going public wasn't that fantastic anyway, because it was all about growth and not profitability. So, and look, man, I think there's just deal flow in general has changed. Investors were just used to getting whatever they wanted, right back in before 22. Investment bankers would do whatever they freaking wanted, so raising was easy. So now it's not that easy. So
I guess also not a lot of capital raises either, though. I guess that's also more interesting. I mean, I probably should. I'm speaking more anecdotally because I'm on pretty much every banker's mailing list. So usually I'm they love to send out that email like, we just raised 2 million, or we just did a show, did all this, and I haven't been getting very many of those notifications over which is an indicator
of the market, Bobby. It's like, they were so used to doing whatever they want to do. I've talked to these bankers to try and tell them, hey, what's like, I partner with a few of them. Let me bring you quality companies, but they're not willing to do it because the mechanism doesn't work. First of all, the investors want too much of a free lunch.
Yeah.
So, and then the investment bankers don't care. So you have this situation where, you got me going on this because it's
go. This is good.
This
is why we do this.
I'm just so disgusted at the investment banking industry right now, at all levels of it, all levels. Okay, because you pitch them the quality, oh yeah, but until it comes down to it, in my experience, like if I want to refer clients to an investment bank, for example, right, they're not willing to build a relationship with them. Like, you need to raise money right now, or not? Go file a shelf right now. They're not. I said, look, some of these quality companies don't have to raise money right now, but you should be building that relationship with them now. So in a year, they're going to have to raise money, maybe make an acquisition or whatever. That's how you do it. So I was referring some of these companies that may have had to raise some money, and they're just selling right away in the first email. They're selling, not building a relationship. But I think that there is room. There's something I'm working on with Jan right now too. Is what is that there's got to be a solution for these really high quality companies. And it might even be raising money to basically solve that problem. I think that's what solved the problem. You need to have some funds that are willing, and even maybe it comes from investors in companies. If you're a shareholder in a company, you believe in the company, you don't want to rape the company.
No.
It's like it's basically you want to give it capital, I would say reasonable capital to grow at a fair price so this thing can multi-bag 10 times or 5 times. That's the way I look at it, right? And
That's the way it should be.
That's what it should be. So I think a conjunction where you have maybe you raise money for a fund that kind of has that, and you work actually with shareholders to raise money together. That might be a pretty interesting concept to explore here moving forward. And that's something I try to work with some investment backers on it, but they're not interested in it. It's all about the here and now. And look, they built a lot of these investment banks have built their infrastructure on scaling. And you just can't. And you have.
But what's funny is that I feel like you could still scale an investment banking business by doing it the way you're saying. But
You can.
I think it's completely doable, and I think there are a couple firms that are trying to do it the right way, or there's no right or whatever. Like there's just a different incentive structure.
Sure.
And I think there are some that are trying to do it the way that you're proposing, and not just, trying to just get a deal done for the sake of, bring in the business, that kind of thing, get your fee, blah, blah, blah. There are some that I feel that are trying. I won't name names because, we talked to them all.
You can email me later.
We'll talk about it after. But, I
but
agree with you. I think there is a business around if you are going to actually try and create a correct, in my opinion, the right way incentive structure here. I mean, I think you could build a great business because look, if this upturn in microcaps continues to go, especially on the high quality side, some of these companies don't necessarily want to sell.
No,
but they don't. That's the problem. They don't want to sell, but they're almost forced to in a way because when they go to capital markets, they're just being raped and pillaged. It's like, all right, well, I need to raise capital so that we can grow faster, but you should see all these term sheets. I'd rather fucking sell.
I mean,
let's be real.
The bankers are just destroying well, not destroying. They're part of the structure, but in the end, if these backers want to survive, they're going to have to eventually figure out. I'm talking about these mid to low tier guys.
I know. Yeah, I know.
There are some higher tier that do good work, and
of course, yep.
But I'm talking about like those bottom feeders in the middle of the bottom there, and they don't understand that they need to change, right? So, and like when I go talk to them,
or just stay in their lane, or just look, they're just keep doing biotech deals. Fuck it. Right?
Yeah, as long as you can.
Just keep doing biotech deals, that's fine.
Keep losing people money. So I want to build like a relationship with some of them, right? But they want to be, but they're building, they want it to be transactional. So it's really hard to have that relationship sometimes because it's just not working. I tried it a little bit. Anyways, yeah, so that's a story from the art thing too. We can talk about that.
I thought it was pretty fun. Actually, it was one thing that I wanted to hit on because we're gonna, not to get ahead of my skis a little bit, but like I'm playing with the next issue of the magazine for the main theme, and we're trying to center it around, I think, M&A. I think that'd be really fascinating, especially with, Matthew Martinez has been all over it, in terms of all the Canadian stocks that have been getting scooped up. Him and Paul, they've been on it. A few research firms too that have been like putting out lists of companies that have criteria that looks like they're going to get bought and whatnot. But it's interesting how there's, you see all this M&A activity happening in Canada, and it's literally, when's the last US microcap that just got acquired? And call me on my shit, or anybody who's listening.
Well, I'll be honest with you. I think Canada, then you start looking at it, you have some really, if you get beyond some of the stereotypes, there might be more quality in Canada than in the US. In terms of not just quality of business, but quality of the valuation also relative to the business.
Look at our Vancouver.
It's pretty amazing. But I wonder what's going to happen, by the long run, though. You have this window, and what's going to happen? How's this market look like in 10 years? Are you going to be left with the zombie companies? That's it. Is it going to be enough high quality companies, because even what investors want these days, because they're short-term investors, a lot of these companies went public back in the day when you had an average holding period of 6 years of the investor. It was a long-term mindset. Management was more long-term, the investment was more long-term. Now everything is a shorter term. It's 6 months now. So it's really hard. And then you have management teams that become short-term in nature. So you don't build businesses to last. You just build businesses to dilute and raise money and whatever, just tell a story. So I don't know I'm not trying to be dramatic at all. Right? I think there was enough flow of companies for years of these old school, like one of our tier one quality of the index. It's the companies have been around for 25, 30, 40, 50 years. So these are old school companies have been around. They have this old school value still, have great customers and built a business already with long-term vision. Those are eventually going to start attritioning out.
For sure.
Get bought out.
I agree. And I think I'm a little bit lean more on the optimistic side of like, I don't think quality will necessarily go away or not be here in 10 years, because I mean, at the end of the day, there's only so many ways to exit, right?
You go bankrupt.
Well, no, but you know what I'm talking about, like, or expire, or just straight up expire. Not to get morbid here at the end of the summer.
I'm extremely optimistic on Nano's quality for the next 10, 15 years. Extremely.
Yeah.
When you had this period
globally too, I mean.
Yeah, but for sure. I don't know enough about Europe, and I know that Canada and US are going to be my hunting ground here for the next several years. When you had that situation going on from 08 to 22, you're like, is this permanent? You realize it was temporary, but it was such a long temporary freaking stretch. Now, look, if rates come down again to crazy low again, I don't know what's going to happen then. The reason we had that situation occur was because we had really easy money, right? And I don't know at what rates again where you start having the growth versus value thing come up again, and
we're gonna start to see like content creators go public. That'll be that's the whole economy. That's what's gonna be in 5-10 years. It's just I'm a content creator,
But what this is doing too, this is creating new investors, like we talked about earlier. We talked about Kyle, we talked about Sam.
It's great guys, by the way. I haven't met Kyle yet, but we just had Sam McColgan on Planet MicroCap, and he did a great job. I'm super stoked to follow him on it. Yeah, look, he's making the rounds. Look at us, like he's but yeah, no, I'm stoked. I'm gonna be following his career for sure. He just started Stanford, man. He's getting after it, dude. That's for sure.
So basically, I'm sorry to take you off topic there, Bob. So
we're just jamming.
End
of summer.
You know what's gonna happen.
Yeah, I'm rocking my Lebowski hat today. Like we're just going for it. Real quick, let's finish a couple slides. Let's do our best to stay on topic. I think you had one spotlight, right?
Yeah, so what I want to talk about here was that, so we have the passive index proving itself out, right? Now it's time for us to be a little more active and start going into passive index to get more alpha from the index, to find stocks that we're not recommending stocks, but we are trying to create more alpha producing mini indexes. Who's calling that, right? So we have now the Spotlight Mini Index. We haven't like branded it. We're about to brand it pretty soon. So you look at the returns here. So we launched it in April, and it has 5 stocks now, and you see the current return is 42.8%. One of them already got acquired, a Canadian company, by the way, Hero, the aerospace company.
Yeah.
And then
HROW.
HERXF and H.
I was going the symbol.
I forgot already. HXT.to. I just know OTC, HERXF.
It's like one of these
HXT.to maybe.
Hello, DefTech. I'm gonna have to hit up Matthew on the proper pronunciation there. That's probably like one of those French Canadian names. Right? Yeah, HRX on the TSX.
HRX, right? But I don't own it, by the way, because I sold it. But anyway, so that's showing you what's going on here with the stock picking in the index. And a lot of members on MS MicroCaps are having fun going in the index and doing their own thing as a hunting ground, which is what the index is for, really. It's really for people who like to do their own research, but every index holding comes with a cliff note. But for those that don't have time to do research, we create these small indexes for them to give us, hey, these are our favorite stocks right now for short-term and long-term multi-bag performance. So that's kind of playing out for us now. So I'm glad that's working for us here. If you go here, here's again the individual holdings in the. I'll just tell you that the Spotlight 5 is Cipher. That was our fifth one we added in August, and it's up 54%.
Nice. We just had them on due diligence.
That's really cool, Bobby, is this. So a lot of these spotlights, okay, we're already in the index and already up maybe 100%. And then we add in the spotlight. So it's proving out, you hear us all talk about it. You hear me tweet about it, you hear Ian tweet about it, Paul tweet about it. Sometimes as things get better, as time goes on, as stock gets better. So don't be afraid to buy stock after it's up 100% or 200% if the stories get better. That should be happening. When you have a 10 bagger, there's many baggers when you get to 10, right? So if you get there. So you can participate at many points in that multi-bagger move. And that's what, this is showing us here.
Do you own any of these and also Cipher?
I own FTLF, own FACO, don't own FRX, HRX, own FEIM, and I own Cipher. Yeah, own all of them. Yes, for sure.
Cipher's an interesting story. I'm not a shareholder. That's an interesting. They're going to be presenting or their slates
in
Vancouver.
It's making a run for it's me tell you right now.
Actually. I was joking them on the pod. I was like, I didn't even know Accutane was still like a thing, and they said it still represents 40% of the market. It's like I still have friends that like are cursing themselves for ever taking that shit back in high school, man. I was shocked. I was like, I thought that was gone.
Yeah, they're basically eating the lunch competitors. So here it is. Cipher right now is the third best performing stock on our index at 513%. So, nice. we still brought it here when it was up 400%, right? Or 480% or so.
Nice.
But that tells you don't be afraid to, look at companies that are and buy them if they're already up. And the index allows us to kind of like put everything in focus for us. So we're getting more alpha with the spotlights, and you're going to see more index, more different indexes coming out soon to kind of highlight these focuses. I will tell you, like our aerospace index, we haven't launched it yet. We have an aerospace thing. We have 4 stocks in the aerospace. HRX is one of them, and the average return of those 4 stocks index is like 82%, I think, right now. They're all up. The 2 of them. So
interesting. Aerospace.
Just telling you,
we talked about that. We talked about that I think on the last time we chatted.
We might have, yeah.
Yeah.
I think so. Hero, Optex, which I own a little bit of, I think. I'm not quite sure about it, but I think I own a little bit of LPTX. FTGFF, which I own a little bit of that. FTG, that's what's it called? FIRAN?
Oh, yeah, FIRAN. Yep.
Canadian, right?
Yep.
And then the last one is TATT, which I don't think I own that one, unfortunately. That sucks. If I do, it's only a little bit, but again, don't hold me my disclosures here. I'm doing my best here to remember off the top of my head. I don't want a lot of stocks, Bobby.
I know we got to make sure you have your portfolio up every time we do this, so that we don't miss anything.
Yeah.
But
that'll be across my whole freaking window here, so I can't. I don't think it would fit it.
Here, give in 2 sentences or 2 bullet points. Why is aerospace across the board right now?
So aerospace is really hot now because a lot of it was because of COVID. So we went through COVID. A lot of production stopped, right, in the aerospace industry, as you can imagine, especially in the commercial side. And there was already a big backlog, building up. So we stopped, and now we're coming out of COVID, and all that backlog's coming back up. So if you look at the statistics from Boeing and all the Airbus, you're talking 10 to 20 years of backlog reduction here. So there's a very interesting sweet spot. So another one of our multi-bagger factors, Bobby, of the 9 we talk about, actually is when industry trends change to basically affect a new growth cycle for a company. So AI is one of them for some companies. It's transforming boring companies to exciting companies. Well, this is an example of that. So you have the delay in the COVID caused a delay in backlog, the delay in production. Now it's all coming to fruition. And then you have, of course, that's great for the commercial side of the business. Of course, defense is doing defense aerospace is going to continue to explode now because what's going on in the world here. So it's a perfect storm, I think, for them. And furthermore, this is for all companies really in general that responded correctly to COVID and inflation. They've right-sized their balance sheets, income statements, so they're more profitable. So you have this, when you have a situation like this, where you have a more profitable kind of slate as you're going into an industry that's changing for the better, and you have this double whammy effect. So I would expect all these companies, personally, I think they're all going to be just like crazy multi-baggers if they don't get acquired before that. I mean, I think they could all be 5-baggers potentially that would go on the aerospace side that we talked about there. So I'm happy about that.
Quick divergence question.
Sure.
Potentially before if yeah. Oh, okay. All right.
I'll go back.
All right. Do you think FinTwit is back? I felt like it was, before small caps were, we did our small caps are back. It seemed like it's not that FinTwit ever went away. Like, I mean, I honestly just don't even post all that much. I just post our content on there. Right. But every so often, I'll spend like, maybe 15, 20 minutes a day just kind of going through and seeing some of the conversations, or at least previously. And it seemed like stock talk had kind of chilled out, or, I mean, now it's clearly back, it seems like, in a big way, where I feel like a lot more people have been actively sharing ideas, or maybe it's just what the algorithm's feeding me. But I don't know. I'm curious from your perspective. It seems like people have been a lot more active with sharing ideas, and I'm
getting more use out of it than I had in the past. For sure.
Same.
I feel like I don't know if it's because of, I mean, I don't like a lot of things that change on Twitter or X. But one of the things I've noticed is that I am getting more value, I think, than I had before. And it might be a situation where, because quality is winning out, that you're seeing less of the, you'll see pump and dumps everywhere, but more of the quality is starting to show on Twitter, because that's what's working. What's working will be more what's talked about. I think Substack is a part of it too, because Substack, and you know that from having a Substack, Bobby, Twitter plays a big role in getting your leads. So people on Substack understand that, so they go talk about some of their stock picks on Substack. Sebastian Krog's on there, great stock picker doing it. Sam's doing it. Kyle's doing it. I mean, Paul CFA doing, not a CFA doing. I don't. So it's great, and it has this kind of viral effect. So I think you see, I do agree with you on that. That I've seen more activity there, and I don't know if I'm just noticing it more now. But I do see more quality stuff going on the stock picking side.
Yeah, just an observation. I don't know. I feel like it's been definitely. I've been finding myself on Twitter more and more recently, just seeing like good conversations. Bad too. Don't get me wrong. We always got to remember to be respectful on there. People are putting out their ideas. Like, there's a right and a wrong way to disagree with someone, and if you don't want it public, just DM them, because you don't want to lose people, really smart people, because you're just trying to be antagonistic, or somebody's providing good quality feedback on an idea that maybe someone else is bullish on. Like, just want to keep reminding people, like, it's important. Let's foster quality conversations and community, and not just saying you're an asshole because you're saying my stock sucks or my idea sucks. But anyways, let me finish up your slides, and then we could jam for hours here, but you finish it up.
This one really quick is this was a 33rd multi-bagger that hit our thing, HROW.
See, this is what I thought you were saying earlier, was when you were saying here the hello, the H.
I
thought you were talking about Harrow. I was like, oh, HROW. So, I guess I was on the right track in a sense.
Here's a cool stat too, that because Jan can be here, but it's taken an average 10 months for the stocks that reach 100% to get there. So the ones that get to 100%, they're doing it about 10 months average. This was an interesting one because HROW, they make pharmaceutical and drug therapies for the eyes. eye conditions. And when I added it to the index, this is one of the earlier stocks we added to the index. And I knew there was some short reports on it, right? And the stock, I think the stock might have been around, like 18, 19 or something like that. And I bought it because it was the earnings growth I saw with the analysts and the guidance, and I didn't make my own model, but it was off the charts, ridiculous. So I figured this thing can be $100 stock in 4 or 5 years. But right when we freaking published it, or we put it in the index, not too long after that, JCap, I think, came out with J Capital came out with a short report, and there were already previous short reports on this company already. So the stock actually reached all the way to $7, $8, $9 it went down to, and then recently it's come back up. So I thought that was cool to see that. And I have no opinion. I don't own the stock at all, and if I wasn't on the stock, I'd have to go back and look at some of those short reports a lot more closely. But again, this index is passive. I'm not taking it out. I live and die with what I did. So if this thing gets an SEC investigation tomorrow, it's down 40 points, or that was my bad. But I'm making my bed and staying and sleeping in it, right? So, but it's kind of cool to watch that. You're seeing this a lot in the index now. After it marinates, these just stocks that get crushed, they go back up, and it's becoming a great way to look at things. So I love buying stocks that go down a lot, like the buy and pullback portfolios we do at Geo. So I use the index to look at these high quality companies that get crushed and see if there's a reason to buy them. So, and that's I think that might be the end of the presentation, Bobby.
Your fallen angel portfolio. We're talking branding. Well, I mean, look, we've covered a lot. I'm sure there's going to be a lot more to cover in the coming months here. But I mean, final thoughts as we wrap up the summer, getting into the the heat of conference season. It's basically conference. It feels like there's a conference every other friggin' week.
I just came back from Chicago.
I'm very much contributing to that trend as well. But how was Chicago?
It was good.
It's got a nice lineup. That was a good lineup.
I was able to interview. I did a special on camera thing with Lakeland and Creative Realities. I own Lakeland. I don't own any corrects. And then BKT guy, which I don't own also right now, but which I did.
What was the symbol again?
BKTI.
Got it.
If I do, it's 100 shares. I don't know just to have it, but I don't think I have it. So there you go again.
Nice.
Scott Weiss was big on that name for a while, actually, pounding the table on that.
Yeah, well, he did a Q&A with them in Vegas, not this year, but the year before.
Okay. Yeah.
So, I mean, all right, close this out. I mean, August was nuts. Do you expect the crazy to continue? Do you, what, based on your 30 plus years of doing this, and, it's kind of crazy because you're only 40. But
yeah.
I knew you'd appreciate it. But, I mean, do you expect some of this craziness to continue? Do you expect election to have any kind of impact? I mean, I know where your head's at, but just for the generalists or, passively following the small microcap space, I mean, what do you think?
I still think, this, I know it's boring, Bobby, but we're in the early innings, maybe first 2-3 innings of a very long-term small cap, or I should say quality small to nano cap rally, a bull market. And there'll be resets along the way. I'm very bad at predicting that, but I'm going to be very confident in buying dips from stocks in this index and the stocks we have on Geo. So that's how I'm approaching it right now. I'm just going in with a lot of conviction. I haven't been this highly convicted in a strategy for a long time. I felt this way this is how I felt for my first 20 years of my career, which I really had a really good time with that. The 2009 to 2022 period there was some conviction there, but it was always walking on. I was just always walking on rocks there, just real tepid, because I didn't see it was not a broad rally in the GARB nano cap thing, right? But now because I've experienced that first 20 years, I feel it. I see it. It's happening. And the new investors we have here now in the market, these young kids, Substack is really helping, I think, to build a lot of credibility in the market. So I just think a lot of good things are happening to help this thing be sustained. for many, many years to come. So now one thing I'll be regarding election is I'm looking for where is the overreaction going to be in the election? So I'm thinking, okay, well, if Kamala wins, right? I'm really looking at the infrastructure trade getting steam. So stocks that are in infrastructure. And we have a screen on that. It's an incredible geo. And then I'm also looking, if Trump does win, will infrastructure stocks pull back for a second? Because the infrastructure bill right now that's out there it wasn't bipartisan, it was under Biden's rule. And is Trump going to want Biden to own that? So is there going to be a change? Who knows? But I know Trump does like infrastructure though. So if there's a panic sell on that, a panic sell on the infrastructure, yeah, I'd be looking to go in there and maybe buy some stocks on that list we have. I think we have like 25 stocks on the list right now we're looking at. So
Yeah.
That's really it. Yeah.
Yeah. No, and like we'll probably have more to talk about like on election implication stuff as we hear more policy from both sides. With all the debates and everything. It's gonna be my favorite pods to do. Yeah, right. Yeah, right. Probably stay away as far as possible. Because at the end of the day, like it's so hard to predict like how markets are gonna react and all that kind of stuff. But anyways, with that, Maj, where can our audience go and find more information? MS MicroCaps, Geoinvesting, social media, the whole bit.
Yeah. So basically at Substack, your favorite, MS Cliff Notes. It's a Substack there.
Substack's the shit. What's the not like about it? You like it.
And then you can find us on the you can find the Geoinvesting at geoinvesting.com. The Twitter handle on geoinvesting.com is at geoinvesting. My Twitter handle is at Maj Geoinvesting. You can also find the MS1 is that is the Substack handle is MS MicroCaps on Twitter, and you can follow us there. I'm doing a lot more spaces too, so which is kind of been fun a little bit. So yeah, that's where you can find. You always email me at majgeoinvesting.com. And I'm always like talking stocks. So just let me know.
Love it, man. All right. Well, you have a great Labor Day weekend. This was a lot of fun as always, and I'm sure we'll be doing one of these again relatively soon.
Thanks, Bobby.
All right, man. Later.